That's not a cup and handle. That's a beer stein. I agree, Jason. Look at that. Perfect fit.
And guess what? When it breaks that neckline there, I'm going to be having one of those beers. Hi, it's Mike and Alan once again with the Gold Silver Show. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Good, good. So you put together a presentation on some viewer comments. So why don't we go through that?
Yes, exactly. So most of these are about silver. We've got a couple about gold. And the first one here comes from Thomas. He says, charts show what happened. In other words, the past. I'd like to know why things are pushing the price up right now. So any thoughts on that, Mike? The latest on why the silver market is moving right now?
The best investment you can make is in your own financial education. That is it. That's a better investment than gold, silver, Bitcoin, anything, is first to learn about all of this stuff. The book that you and I spent 4 years researching and writing, the one that, and we had another Tim Burris, another research assistant working with us, for 4 years we did this. And it has pretty much everything in there. And so if you want to know what's pushing the price up now, there's a whole bunch of things. But we're in a 5-year structural deficit where we use up more silver in industry, basically, and throw it away than we produce each year. Stockpiles are running very low. If you add investment demand, it's in a 7-year deficit. And these deficits are not small. All it takes is just a tiny amount of monetary demand, which means a crisis. If there's any crisis, I mean, look at what happened. Silver is in the mid 30s or the low 30s right now. It was $48 in 2011, and that was right after the global financial crisis. It did that run up. It's still below. I mean, it hit 52.50 intraday in January of 1980, and there's like nothing that is selling at a discount to its 1980 price, except maybe computer chips, because they were brand new back then, and the Moore's law has caused the price to fall. So anyway, there are so many drivers. It's a separate chapter in the book, but industrial, even without any monetary demand, industrial demand, solar panels, superconductors, batteries, electric cars, they're going to take the price of silver up alone. You don't need it to be a safe haven investment for it to pay off. The safe haven investment is what will create the fireworks. Any comment?
Yeah, I agree with you. And I'm going to say something to Thomas here that's a little bit counterintuitive, which is that I have a better understanding of what's going on in gold and silver today by studying things from 1970, the 1930s, 1913, 1776. So, history repeats. So you can read about an entire bull market and understand what happened back then. And once you realize, oh, we're going through the same thing now, you can answer this question. I'd like to know why things are pushing the price up now, because there's historical precedent for it. So yeah, it's just a repetition of what happened before.
Yeah, exactly. Okay, so let's move on. Yeah.
All right. Our next question here. What I don't get about the narrative, Mike, I get that silver is undervalued by historical standards, but what is the value proposition for silver today and going forward? Measuring against a house, why would the price of silver mean revert? I know we all want silver to be monetary metal again, but I don't see a catalyst for it actually happening. What do you think, Mike?
Okay, well, the way I just answered the last question sort of answers this question as well. We are digging up the easy silver and running out of it. It's all in the book. This includes gold too. The easy discoveries, the big deposits have all been discovered and worked out. Are we running out of wood? Can you regrow wood? Yes, you can. So building a house, you can grow the trees, you can build a house. So we're not running out of forests to build houses out of. Are we running out of silver? Yes. Take a look at the U.S. Geological Survey. The silver needs to go up. It is severely undervalued compared to other assets. And we don't need it to be a monetary metal again. For it needs to mean revert against these things. One of the reasons it hasn't yet is, one, there's a manipulation. Two, it's a byproduct of mining other metals. But as soon as we have a global financial crisis again, there's always a crisis around the corner. It might take 10 years to get here. It might take 2. The longest is a little over 10 years that we go between recessions. And and when you look at where we are as far as the bubbles in real estate, in stocks, we're in the everything bubble, except it's the almost everything bubble. I point that out in the book. Gold and silver, measured against everything else, aren't in a bubble.
Yeah, exactly. So yeah, I think the value proposition for silver is pretty clear in that case.
Yeah, the catalysts going forward are a steady march forward if there is no crisis and no monetary demand. They need it for electric cars and for solar panels and everything else. The projected demand far outstrips projected supply, and we're already in a deficit that's 5 years old. And so the only way to correct this and actually have enough silver for industry is for price to reduce demand as it goes up and increase supply as it goes up. And then it would get back into balance with everything else after a while. But it is severely undervalued. Okay.
Yeah. Exactly. So silver, one of the most useful materials in the world. It's not renewable, as you pointed out, compared to something like wood. Dwindling supply, increasing demand. I mean, all the factors that could be good for silver are good for silver right now.
Yeah.
Yeah.
Right. Well, you specifically mentioned measuring it against a house. Why would it mean revert? You can always grow the wood for more houses.
Exactly.
But you can't grow more silver.
Exactly. Perfect. Excellent. Next question comes from Liz. May I ask whom will be buying our silver once it goes up? Suggestions?
Everybody. It depends. If there is another financial crisis, if there's a monetary event where people seek safe havens, people will rush toward. I mean, I've said this so many times. So, like I said, your best investment is your own financial education. The book is only $9.99 if you get the Kindle. And I'm not trying to. I actually lose money on the books. I'm not making a profit on the books. It's just a whole bunch of factors that came together during COVID to cause me to have to make a much larger investment in producing that book than I would normally have had to have made. And so every time I sell a book, it costs me about $1 right now to sell a book. It's spreading the knowledge is the reason that I pay you $1 to read the book. Now the Kindle doesn't cost me anything so I probably make a little profit there by the time the publisher and Amazon and everybody else takes their cut out first. But the book does answer all of these questions. And the thing is, if you use numbers instead of emotion for your exit scenario, when you're going to sell, you should be selling at the point when everybody will not take that, when they want it so bad that they will not take no for an answer, when they are buying at the wrong time. Because if you take a look at history in 1980, it was the peak in 1980 when everybody was lining up at coin shops. That's what causes a peak. We haven't gotten anywhere near a peak yet. In fact, if you take a look at retail sales, they're actually down, right? Even though silver has gone up, the retail sales on both gold and silver are down. It's China propelling gold, China and central bank buying for gold. Now, if the world's central banks seem to be preparing for something and they've made gold a tier one asset, shouldn't people like be investigating this more? So if you want to know who you are going to be selling your silver to, it's all in the book. Alan and I did so much research and dedicated so many years of our lives to this. So
yeah. And you're going to be selling it to people who are not learning about this right now, right? They're going to be learning about it a year, 2 years, 3 years from now, much later. They're the ones who think that a crisis can't happen. They think that the stock market's going to go up forever. There's never going to be another recession. That's who you're going to be selling it to.
Exactly. Right.
So,
and you want to be, it's just like getting into a line. You want to be at the front of the line right now and have your gold and silver, and you're going to be selling to those people that are showing up late, that are going to be offering anything to get it. And it isn't really the price, it's the value. How much stuff is it going to buy? When the guy said, why will it mean revert against a home, his home? It's because if you look throughout history, one of the chapters that got cut from the book is something that Alan and I spent a lot of time on. But we took all of these different financial assets and you divide them against each other and you take them back to the 1870s, or how far back did we go? And what you see is that they're in balance once in a while, but they keep on, one of them goes overvalued compared to the other, then it reverts. It reverses and it reverses. And some of them over the past few hundred years have been in balance. They've done this like 25 times. It's just insane. And I mean, that chapter, it just put too much. It was going to be a 100-page chapter and put too much space between the beginning of the book and the point of the book. And so we had to eliminate it. Also, huge paper shortages. And then I got offered this really expensive paper, but I was told if I took it, I had to take all of it. So I ended up printing 4 times more books than I wanted to. Otherwise, we would have had to wait another year to be able to publish the book. That was during COVID. It was the supply chain disruptions. So anyway, get the Kindle version. There's the chapter on silver is not that long. It'll take you half an hour to read, or maybe an hour at the most. So, but you'll have a real good understanding of this.
Exactly. All right, moving right along here. Dan says, you need to do an inflation-adjusted valuation of gold and silver. You will see that, as you surely know, that gold and silver are the same price in adjusted dollars. Gold and silver are a great hedge to maintain purchasing power. Well, thank you, Dan. Do you want to jump in, Mike?
Well, yeah, he's the great hedge to maintain purchasing power is true over the centuries, but there are times when it goes into bubbles, and it's not in a bubble yet. If you want to increase, if it were true that it has only kept up with inflation, then right now, the Dow Gold is at like 12 to 1, and it was 45 in 1999, 2000. I believe it was like 38 when I first started investing. So I can buy like 3 times more stocks with my gold. I can buy a whole lot more real estate with my gold and silver than I could back then. So it's gaining in purchasing power if you're buying it at the right time, because it goes through these overvaluations and undervaluations. And when you measure it against decades of history, what you see is that we are still in a severely undervalued state right now. So it's gold and silver. Gold, if you use the CP lie, yes, it's corrected against inflation, but not silver. Silver is still, okay. So you've got your inflation-adjusted gold channel here. So explain this, Alan.
Yeah, okay. So the gold line is the price of gold. We've all seen that a whole bunch of times. And we've got 2 different inflation measures here. The government CPI, which we call the CP lie, that's green. and it creates a valuation channel. So if you were to index the CPI to the peak of gold back in the 1980s, you would get this green line going across the top here.
Yeah, or if you index it to the bottom in 1970, you get the green line on the bottom.
Exactly. So those two green lines are perfectly parallel to each other, and it forms a valuation channel. So that's really the high and the low that gold ever was. And you can see it kind of bouncing around between this valuation channel. So the suggestion there is that according to the government CPI, CPI numbers, the price of gold is kind of near the top of its range. Like we're almost at a peak and maybe it's going to go down from here.
Right.
That seems ridiculous to me because, as you pointed out, Mike, like all the factors that you would expect to see at the peak, we don't see them. We don't see people lining up outside the coin shops and all that stuff.
Exactly. That's what causes a peak, is everybody trying to rush into it at the same time. And what we are actually seeing in the retail sector is low sales volumes right now. The public is still like yawning when it comes to gold and silver, and they're chasing the stock market right now, which is the Buffett indicator is just in insane valuations. When this next crisis happens, it's going to be one of the worst that has ever happened because there's so many things are just so skewed. But what's interesting here is you have the shadow stats CPI, also called the shadow stats alternate CPI. Now, a lot of people think, oh, well, that's just some nut putting together. No, John Williams was an insurance actuary. And in the mid 80s, all of his models stopped working. And he was wondering why. And he started researching it. And then he found that the government was changing the way that they calculate inflation. They kept on messing with the CPI. And he went back and used what he uses for this alternate CPI is the government numbers from World War II to 1982, the method that the US government used to calculate inflation. So these are both sets of government numbers. One of them keeps on getting massaged periodically anytime the CPI is coming in too hot and it makes the administration look bad. It seems to get adjusted. So what have you got there? I've always said also that the truth probably lies somewhere in the middle. But these are two sets of government CPI numbers. And one of them is adjusted to sort of cheat Social Security recipients out of their full, they don't keep up with the true cost of living. And all you have to do is, if you look at the CPI and look at your personal purchasing power, where it has gone and prices, go to a restaurant. I've been traveling. You order a hamburger and a beer in a airport. Oh my God, it's just unbelievable. So,
yeah,
gold and silver have not kept up with true inflation, the inflation that you experience day to day. So I believe that the truth lies between those numbers. But gold is nowhere near being in a bubble. And so it shows that it should be, if the green government CPI was true, then gold would be in a bubble, which would mean it would be of a large percentage of global financial assets, that it would be on the news everywhere, that every financial planner would be recommending put 30% into, what's interesting, nobody recommended gold back in the 70s until the last, all the financial planners switched to recommending gold, put 10, 20, 30, 40% into your portfolio after the peak in 1980. And there's a movie called Brewster's Millions with John Candy and Richard Pryor. And Richard Pryor is going to inherit a whole bunch of, it's like $33 million or something like that, a lot back in 1982 when this movie came out. And John Candy Brewster has to spend $1 million in like a month or something like that, which was almost impossible back then. And just on living, just stupid stuff. And John Candy's trying to protect him because everybody thinks he's gone nuts. So John Candy gets this financial planner. Now, this is 1982, after Gold's Peak. He's going, oh, yeah, this guy has me in collectibles, and he's got me in this and that and precious metals. And so they're showing, it just shows how everybody chases yesterday's news. We are nowhere near a top, or you would be seeing lines in front of coin shops. You would be seeing dealers running out of metals. This is nowhere. It doesn't make any sense at all that it would be up near the top of that green valuation channel and be in the same type of bubble that it was in back in 1980, measured against the rest of the economy.
Yeah. Exactly. And if we do follow the Shadow Stats valuation channel, that would imply that, first of all, gold is basically the cheapest it possibly could be, the cheapest it's been historically, and that it should go up to roughly $34,000 an ounce the next time it hits a bubble. So
the next it goes up to, like, I think it was like 8% of global financial assets back then or something. I can't remember what it was, but it was huge. It was on the news hourly. And I've got, the book has all these quotes from Time magazine back in 79 and 80. So if you want to get a historical perspective on this, it's $9.99. Get the book and just scan through it. You'll have all the answers to all of this. So
yeah.
Yeah. Okay.
Yeah, and as you mentioned, Mike, the truth is probably somewhere in the middle. So the CP lie understates inflation. The Shadow Stats CPI might overstate it. So what I have here is a very similar chart, but instead of this green line, I have a different green line, which is M2. And M2 is like right in the middle. And you can see that gold is pretty nicely sort of where it feels like it should be, which is, below halfway, but certainly not at the bottom of the valuation channel.
Right. And what's interesting here is that it's actually closer to the Shadow Stats line than it would have been to the CP lie line. And M2 is basically where all of the dollars, this is the dollars that get created by the banks and the Federal Reserve. And they go out into the economy. So this is covering true inflation. This is also covering the inflation of the stock market. If bonds are getting inflated, if real estate is getting inflated, in the CPI, the CP lie, they decided that you don't actually own your home, you rent from yourself. So it's a rental equivalent of what you... It's insane is what the CP lie is. But this sort of corroborates what I was saying, that the truth lies somewhere in the middle. $12,000, that is actually a reasonable target if gold goes into the same type of bubble that it was in back in 1980. We don't have lines at coin shops. We don't have it in every newspaper's headline. It's not on the news every hour. It isn't dominating, and it will. There will come a day where it dominates the news cycle. So buy the book and read the quotes from the Time magazine articles. It's very interesting.
Yeah. I found that fascinating, especially because I wasn't alive during that period. So it's very cool to kind of get in touch with that era.
Yeah.
I have the same charts here for silver. So starting off with the government CP lie, as well as the Shadow Stats CPI, you can see if we look at the green valuation channel that silver kind of broke through the bottom there for a solid decade. And it's sort of in the bottom half still. And next time silver hits a peak, according to the CP lie, we might expect $200 an ounce silver. But if we take the Shadow Stats CPI, then we're still far below this valuation channel. We're below the bottom of it. Like, we've fallen out of the bottom. We got to get back into it. And then if we hit the top, that would be $2,000 an ounce silver.
So we've got, these are both government numbers, basically. And so we really should call them low CP lie and high CP lie, because they both skew on either side of that M2, which does measure every dollar has to go somewhere. So that's the measurement of how many dollars are floating around in the US economy, basically. And they're all seeking out goods and services. And so the M2 is probably, and it ended up right in the middle. And so, yeah. So $1,000 silver is possible. I doubt it, but triple digits, I think that's a slam dunk, like I've said many times. And so silver is incredibly undervalued right now. It isn't. Oh, okay. So this is, wow, 743. So when we wrote the book, it was a little bit different, but yeah. Okay. Awesome.
Yeah. So even by today's numbers, like silver's below 40 right now. So that suggests that it's even below the M2 valuation channel. It hasn't even kept up with the low number of M2. So
wow,
a lot of room to go for silver to catch up here.
Yeah. All it takes is just it takes people finally realizing, oh my God, we're running out. And if there's any monetary demand on top of that, look out, fireworks.
Yes. I've got something from the book here. The question, where might silver go? So yeah, you've talked about this before, Mike, but basically what we did was
just adjusting it compared to all these other financial assets. And it's what percentage change did real estate, the stock market, the 10-year treasury, GDP, currency in circulation, M2 currency supply, what percentage change did they have from 1980 until today? Now, the numbers are somewhat different than what you just saw in those graphs because we used the intraday high of $52.50 instead of $50. So, yeah. So this corroborates that M2 scenario of inflation.
Yes,
I believe. Yeah.
I think so too. And all these different currency numbers, currency in circulation, M2, MZM, and even the CPI to an extent with an asterisk kind of. Those are similar, I would say, to silver, and they have a good apples to apples comparison. Something like the Wilshire, it's hard to compare because those are companies that are trying to create synergies, right? They're 1 + 1 = 3. That's what they're trying to do. Sometimes they succeed, sometimes they fail, but these currency numbers are directly comparable to silver. Silver doesn't change, right? Atomic number 47, its properties are fixed. When you use it, you're not trying to create additional silver atoms out of cyberspace. So I think these are more comparable. So these 400, 700, 900 numbers, 1200. I think that's in the range of what's plausible.
So I think the low range of where silver should go is that CPI number. That is like if we don't end up, I think triple digits is even inevitable without monetary demand. Getting to 100, 200, that still would not. Yeah, compared to those other financial assets, that 200 wouldn't be in a bubble. The CPI, the current one, the low CPI, is just that. It's a lie. And so I would look at $200 as probably the floor of a predicted future price. When? That's the problem. I don't know. I know that, if you look at my first book, I made like 10 different claims in them. 7 of them came true. The other 3 have yet to come true, but they will. It's just taking a lot longer than I thought.
Yep, I hear you. Next question. Ethes says, do all the math next time. Include storage and insurance in your calculations. So tired of the BS. Well, Ethes, if that's your name, my thought on this is that I've been invested in precious metals continuously for over 10 years, and I've never paid any storage or insurance fees. So that means all my charts of gold and silver, they already include storage and insurance for me personally. That might not be the case for you. But one thing to consider with insurance is that if you have insurance specifically on your precious metals, then you have to say what you have. And that means there's a record of it out there. Not everyone wants that. So be careful about that. And, for me personally, if I had a much larger quantity, I probably would pay for storage, but I'm not at that point yet in my financial journey. So Mike, what do you think about this storage and insurance?
Well, I have been paying storage for years because I'm high profile and I've got a lot of it. And so I can't keep it at home. I have to, but I'm paying guys with guns to guard it. And insurance is included in the storage fees. That's part of it. You are fully insured, and I believe it's by Lloyd's of London. God, we've done so much. Do all the math next time. You know what? You should do the math for us and get back to us. I'm sorry. I've been doing this now for almost 20 years. And I'm a little bit tired, actually, but it has paid off. You can there's schemes today. You can get cash flow on your gold and silver. Scroll down to the bottom of the page. You're taking the only asset that has no counterparty risk that you can hold in your hand, and you're introducing counterparty risk, and it says so right at the bottom of the page that you're introducing risk. But you can get cash flow on it. They will pay you a percentage for leasing your gold or silver, but will you get it back in a crisis? That is the question. Storage and insurance in our calculations. Maybe we'll come up with some sort of data feed that we can get that. I don't know of a data feed that makes that an easy thing to do. We'll see.
Yeah. That's tough. And different people pay different storage fees and have different kinds of insurance policies.
Yeah.
Do it yourself.
And then if you've got stocks or something in a brokerage, the broker takes something sometimes. They all make a profit somehow. Everybody does. And then if we're doing it against real estate, then really what we do need to do is take out taxes and insurance on, we have to add taxes and insurance on real estate. If you're measuring stuff against stuff, everything has this. And so, I don't know. Anyway, let's move on.
Yeah, we're not going to do anything different on that one. Christopher asks, what is the point of getting excited about the price of silver in terms of the dollar? Wouldn't a skyrocketing price indicate a collapsing dollar?
Yes, right. If I'm trying to think of a value of something like a stock or a car, okay. So you take a $100,000 car and it goes to $1 million. And we've got the dollar is collapsing. If you take $100,000 worth of gold and it goes to $10 million, yes, the dollar is collapsing, but you can buy 10 times more cars with your gold that is pricing those collapsing dollars. It is the canary in the coal mine. And what happens during an event like when the dollars are losing value, and they have been, I can buy so much more real estate, stocks, just about everything I can buy more of today because I've been invested in gold and silver for so long. And other than cryptos, best performing asset of this century. And when you include cryptos, best performing, Bitcoin is up again. I don't know. Maybe it's not, but as of like a week or two ago, a best performing asset of this year, including cryptos. Mm-hmm. And so, yes, it is the dollar collapsing. That's part of the skyrocketing price. And that's the reason you've got to stop measuring stuff in terms of dollars.
Yeah. The way I like to think about it is kind of like what you mentioned, Mike, traveling, getting a cheeseburger and a beer at the airport. In my mind, an ounce of silver should be able to get you a meal. So if it's $35, it should be able to afford a meal. But when we get excited about the price of silver going up in terms of the dollar, we get excited about that going up a lot faster than the price of a cheeseburger or a beer, right? So if silver goes up faster,
that's how much the cheeseburger and beer was. It was about $30. Well, maybe it was $50. I can't remember, but it was just an insane price in the airport.
Yeah. Yeah, but if silver goes up faster than that, then you're doing good.
Yeah.
I
I remember I was shocked.
Yeah.
I used to, when I first started, let me see. I think McDonald's burger was 15 cents and French fries were 10, I believe. Yeah. Okay. Silver is a percentage of global financial assets. And this chart ends in 2015. So it's old, but 2015. So the price of silver is more than double what it was then. But still, that gives you an idea. And that 1980 rush, that's what a bubble looks like. That's when silver was in a bubble. It's nowhere near that today, but that day is coming. And I do feel that it'll be somewhere around $5,000 an ounce gold, where people will look at it and go, wow, this was $250 an ounce in the year 2000. I think, maybe the silver is a better bargain.
Mm-hmm.
They'll think there will come a day where they think gold is too expensive. That happened in 1979. Gold had gone from $35 to $400, and people changed their preference in late '79 from gold to silver once gold was perceived as being a little bit on the expensive side.
Yeah, and they rushed into silver quickly.
Yeah.
Last comment here. That's not a cup and handle. That's a beer stein. I agree, Jason. Look at that. Perfect fit.
And guess what? When it breaks that neckline there, I'm going to be having one of those beers. That's great. So who is that again?
You Jason.
Jason. Thank you, Jason. Excellent way to end this video. I want to thank you, Alan, for putting this together. It was great.
Yep. Thanks, Mike. Thanks, everyone. Invest and earn up to $2,000 in bonus silver at GoldSilver.com. It's easy. Step 1. Open any GoldSilver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit GoldSilver.com/free silver to claim your silver.